All right, hello everyone. So I've done a well, I've done a golf trade. Okay, it might go pear shaped, but it's worth doing a case study on it. Okay, and I'll explain why. Remember, often talk about boxing a trade. Okay, and let's do this into a 5 minute chart. Okay, so I'll explain why. Now on the 5 minute chart, today's Wednesday, by the way. All right, it's today's. I had a trade hour here, okay, and I've got trade hours here, which we're actually right on at the moment. Okay, this is why I got myself a cup of coffee, and now I'm kind of like following it through to see how things go. Okay, and because yesterday was a trade day on gold, all right, and we had an inside day, two things can happen. We're either going to break up to the upside, in which my direction bias is to the upside because I've got an impulse P shape pushing to the upside. The other thing is if I box it and see how things pan out, then I can have a tight stop loss. So even if I'm wrong, it's not going to be a big deal for me. All right. So now that I'm on a 5 minute chart, I'll tell you guys how I boxed it in. This is today. If you take a look at your trading hours, it's 6:35. Okay, which is 5:35 on the platform. Now this is not the best place to trade. Okay, I would have liked to have traded at the lower part of the day, or maybe at the Asia support, but this is my morning hours, so it's a little bit in the middle of nowhere, and I don't like trading in the middle of nowhere. So what did I do? I boxed it in, which means as at that hour I waited, and then I took the high of that and I took a low where the market bounced up. Okay, and then once that broke, that was the sign for me that we could probably go to the upside. And then knowing already that we've got hours here as well, I'm thinking to myself, two things I can do. I can either break out on this box and then go along with it because my bias is to the upside, or I can wait for this time period to go long and to see where things pan out. Okay, so I decided to go long on the breakout of this one because it looked okay to me, and this is also not a bad spot either. All right, this is London pre-trade session 10:40 to 10:55. Okay, which you guys have on your trading hours. So the other option was this. Now, let's get rid of these boxes and let's do this. If I was to box this in, how would I do it? Let's work on that too. Now, these are the trading hours, so I'm obviously going to wait until these trade hours are over, okay? And then see how things happen. Now, if you took timing from me, you know that from 10:40 to 11, we might have a tricky move. That tricky move could be a spike to the downside, okay? Or it could be like a push to the upside. Let me get rid of this as well, okay? And we're going to see how that pans out. Now, because it's a 5 minute chart, as you can see, this is the zone where everything is happening. And we're already nearly 4 minutes into the video. We'll just see how things pan out. Okay. So this, oops, let's do this again. This is the zone, right? This is the time zone. Okay, and we'll see how things go. Now, as you can see, my stops are down here. Why? Because remember, when I boxed it in, okay, I took this high here and this low there, right? And when it broke out, it gave me the confirmation of my bias to the upside. Now, this doesn't mean the confirmation of my bias to the upside is going to stick, okay? But at least it allows me to put a stop loss because I don't want to be going below there, okay, if my timing is correct. If my timing is incorrect, okay, then this will turn south, okay, and then I'll get stopped out. But the beauty is it's not going to be too far out, so I'm not going to be You know, I'm not going to be in a big heavy loss. Also, because of the volatility of gold, note that every small bar is now a lot of dollars, right? So we can have one bar like this, as you can see, could be like 15, 20 bucks, okay? So keeping the volume low, all right, and making sure that your stop losses are not too far out is the way to go during these kind of situations. So if I hadn't entered on the breaks, okay, and the pullback of this, on the breakout of this one, okay, what I would be doing is now boxing this one, okay. So let's get rid of those boxes. Now, in order for me to box, I have to wait, don't I? And you can see this is like, it's going against me right now, but at least it's doing it at the right time. So I'm thinking to myself, okay, it's reacting to the time that I calculated because these were the trade hours. So now this is either going to give me a low where the market will want to buy and push up and my bias will be fine. And then I would have said, well, I'll say, okay, if not, okay, then it'll go to the downside. Now, if and when these hours are complete, so let's say when I get to 11 o'clock, right, this is 9:55, so my 11 o'clock is going to be 10 o'clock on the platform. So once the bar here is completed, it should make a low, okay, and I should be able to see if I can put my stop loss even a little higher, and then we can take it from there. All right, so as you can see at the trading hours, seeing that movement is fine, even though it's against me. All right, even though the trade is going against me, it's good to know, because then you say to yourself, well, wait a minute, I calculated those hours, they're going pear-shaped, they're going in the opposite direction, so I could get stopped out. Yeah, but knowing that, okay, instead of looking at the screen for hours and hours and hours, and knowing the hours when things can go in your favor or against your favor is like a really big bonus, because then you can like really chill out, watch, and be okay with it, because it's predictable. All right, and once you have something predictable, you're all honky-dory. Okay, so now we can wait and have a bit of a heart-to-heart chit-chat. Hope you guys are having a good trading year already. We're in, well, it's second week of February already. I've done the first week of March, so I might just put things up. Every time I do a week, I'll just put it up as well. I'm going on a congress this week, so I won't be away. So I'll be away next week, Tuesday, Wednesday, Thursday, Friday. I won't be around. I'll try to see if I can do videos. I'm going to try to do videos, but bear with me if I can't. But you guys already have the trading days and the trading hours, so it's no big deal. We can actually put this into a 1-minute bar and make it exciting as well. Okay, remember, the things that are acting until 10:55, let's say 11 o'clock, should give us these little exciting moves, all right, like it's done here. All right, so it's already done something here, as you can see. So it needs to give us some exciting moves, some sudden moves, and expecting that is also great, okay, because you know that you're expecting some spiky moves, some funny moves, and so on. And a lot of people get stressed because they're looking at the screen, they don't know what's going to happen, how things are going to happen, how they're going to pan out, and so on. But we're all good. So it's 10:51 now. Another 4 minutes, we'll complete this zone, and then the next bar that opens will give us, like the 10 o'clock bar on the platform, or the 11 o'clock my time, will give us a direction. And if it flows in our direction, then all we have to do is move the stop loss up and just follow the trade. Now, with the trades I've got here, okay, I've already, whoops, let's get rid of that. Okay, I've already put the stop loss obviously there, and the targets as well. I have 3 targets, 1, 2, and 3. Okay, so the last one is like 1 to 10, just over 1 to, just about 1 to 10 actually. And this one is like covers the trade, okay, covers one of the trades. This one is like nearly 1 to 3, okay, and then that one's like 1 to 10. And what we want to do is, if it goes in our direction, we want to follow it into the next trading day, don't we? Right, so the next trading day, and then in the trading day we're going to, you know, sharpen up the targets. But if you think about it, let's take a look at it on the daily. Okay, if it goes in our direction, you know, we should be ending up in there. Okay, in fact, I can probably take this all the way into that zone as well. Okay, why? Because if it's going to push to the upside, we should like go into there. Let's make this a little wider. Okay. Okay, and that's the trading day. It's an inside bar, so we're going to break out somewhere. And if we do break out to the upside, that's there. Okay, so that's going to be about 5,400, which we can move this all the way to there. And then I can get rid of this line here. And now that's like, yeah, it's like 1 to 15 now. All right, and now we're coming off time. It's 10:55, and this is what it's looking like. It's a 5-minute chart right now, and we'll see how it goes. You want to make it a 1 minute and increase your excitement, you can. All right, once again, this is a case study for gold, and we'll see how things pan out. Now, another good hour to trade today, okay, which I have actually posted, is going to be New York. Now, New York is also going to be a little energetic, okay, so you have to look out for New York as well. Why? Because until 6:30, you know, it's a little dodgy. And as we get into the morning session, I am expecting a little bit of energetic moves. So it could be a little bit of a, you know, it could be a fast pullback, or it could be a fast move somewhere for the market to go and do that trading. So a good trade hour is going to be like 4:45 my time, 6 o'clock, and let's say between 6 and 6:30. But as we get to 6:30, you know, expect some sudden moves, and then that should take us into an adjustment level at 7:20, right? In the evening, my time, UTC +3. And if we find direction at that 7:20, if it continues or we find a direction, then what should happen is it should take us all the way into closing. It should take us to like 10:40 and then into closing. Okay, so that should be like, you know, the place to be. We'll see how it goes. In the meantime, it's 10:55. So 10:56, and this is the 1 minute chart. Okay, so let's box it in now. So if you wanted to do this box, what you might wait for, what you might do is, look, this is a high, okay, and this is the low, all right, on the 1 minute chart. So what you'd want to do is, if your bias is to the upside, as mine is, what you want to do then is from this zone, right, because it's a timing zone now, all right, what you'd like to see is like a steady up move, okay, going higher. And if it goes lower, then obviously we're going to get stopped out, and that's basically it. What I can now do here is I'll wait until 11 o'clock, so that's another 4 minutes away. Let's wait. I'm not in a rush. The video is going to be a bit long, but you can just double speed it. And See how it goes. Once we go beyond 11, if the market is still up here and it's moving slightly higher, I do want to push my stop further up, because then we're not going to need a stop loss too far out. Why? Because after that, we need to move into 11:30. All right. And if things go pear-shaped, why have a fast stop loss? Because I know the times and the hours that the market can shift. So why keep a big stop loss? And I'm not expecting something like really, really exciting and all kinds of funny moves now until New York, right? Only in New York, I'm expecting sudden moves in the market, sudden spikes in the market, and that's it. So another 2 more minutes, we'll make 11, and then I'll make according adjustments. And when you know the times and at what times surprise moves can happen, you can minimize your risk, and you can in fact say, you know what, I'm not going to stay in that trade. I'm just going to let it go. Let me box this again. Let me do it on the MetaTrader 4 box. Okay, let's do this. And because the next hours that are upcoming are a bit far out, okay, you see they're all the way there. This is a 1 minute chart. Let's turn this into a 15-minute chart, and let's make it a little bigger. Okay, here we are. So it's a 15-minute chart. So you can see that we don't have to keep big stop losses. It can be really tight. You can just box yourself in, and if it goes to the upside, we're fine. And that's basically it. Let's reset that. And if in New York, let's say you're trading in New York, right? So you're probably sleeping now, because in New York it is 3 a.m., right? So let's say you're sleeping in New York right now. Then you wait for your New York session to happen. And then if in New York the market pulls back in New York and you hit a trading hour, let's say at 4:45 or 6 o'clock, 6 to 6:30, let's say, right? Then you're thinking to yourself, okay, so this could be a zone where I could look to kind of like get in. And that's fine. That's also fine. You're in New York, and that's all good. So this is all a matter of waiting now. All right. Now it's 11 o'clock. So what am I going to do? Let's push this into a 1 minute chart. Okay. I'm just going to take this up. All right. A little bit more. Let's keep it there. And you can see it's moving nicely. All right. It's just good to see. All right. And that's how timing can really help us out. Okay. Also, you can see I actually don't like these sudden big moves to the upside or big moves to the downside, because they tend to make markets reverse. Okay. But it's actually good, because you can see like we're getting all this in like this 10-15 minute time frame. Like it's a 1 minute chart. So within 15 minutes, the market's done its funny move, stabilized already in a 1 minute chart. And from now on, we're either going to flow to the upside or flow to the downside, depending on which way this is going to break out. And I'm thinking to the upside. Okay. So now having a tight stop loss is like, okay, and I can just let it go. All right. And you can see my entries here and here, and they were because of the breakout of the box of, let's do this, 635, which was this one here. Okay. And that's it. All right, so it's all good. And now, because I've got this box, I can even move the stop loss even higher. Okay. and that's basically it. But this is London, this is Asia, so keeping the stop at the low of Asia is okay, because New York sometimes like to sweep London and then go up, and that's basically it. So I hope this case study was helpful, and this is how you can manage your trades with time and price. And all you have to do is just look at your trading hours, trading days, and that's basically it. Okay, and just match it to your technical analysis, obviously. Have a good day and a great week.